here.
Hey, Megan.
It is good to see you, and
Good to be here.
I see you're in your kitchen. The
Yeah.
never-ending remodel there.
Well, we only gutted the house in December of 2021, so I think we're doing okay now.
It's only been almost 2 years. What do you expect?
Oh my gosh. And you see, it's been almost 2 years on this.
Jeez, but that kitchen window looks amazing, and I would say a huge asset to the house. So I love it. I love how it opens up like that. So good job. At least it's going to be fabulous by the time it's 2025. By the time you have grandchildren, it'll be done.
Yeah, by the first grandchild will be ready, I'm pretty sure.
Yeah. Okay, so it's good to see your face. We have had just an interesting couple of weeks here with the real estate market, and we've been playing some reruns, but we're back. We've got some content, and we are going to share the information with the people. Yep. So what we're going to talk about today is that we are at a standstill, and the standstill that we are at is the supply is at sort of a standstill, and the demand is at sort of a standstill. And to understand why the demand is at a standstill, all we have to do is look at this graph, and let's not look at 1980, but let's look at 2020. We're looking at the average interest rate to the average sales price to what the income had to be and what the debt to income ratio was. So if we look at 2020, just merely 3 years ago, the interest rates were about half of what they are now. And the sales prices were a lot less. And the debt to income ratio was hugely less.
Yeah.
Can you imagine paying 72% of your income to your house payment? That's bananas.
That's not even reasonable. I mean, from a lending perspective, you really won't get a loan approval at that rate, with that payment debt ratio. But I'm seeing at least across the board on average, most home buyers are right up against that 50% mark on the new loans right now. And that's higher than it has been.
What's the highest debt to income ratio that you're allowed to go that fits the guidelines?
Well, it depends on the program, and there's lots of factors, but generally speaking, you don't want to go above 50. Not to say that you cannot go above 50, but as a general rule, not more than 50.
Well, that makes sense because, there's other expenses in life. There's your utilities, your insurance, your property taxes, your car payments, groceries, kids. So this is why we have a little problem right now. But the other side of it is that there's just not a lot of new listings. And so, in all of downtown Anaheim, I was doing a housing market update yesterday. And in my zip code, in my 92805, there's 74,000 people that live there. It's pretty densely populated.
Wow. Yeah.
And in the whole month of June, only 2 condos sold.
Wow.
Yeah. And it wasn't because there wasn't any condos available. It's just that only 2 of them sold. And now the inventory increased a little bit. So there's like 8 for sale, but there's more in escrow. There's like 11 in escrow. So that shows us that, people are just eating them up if they're reasonably priced. So I think, with planning here the rest of 2023, there's a lot of talk of rates going down. Is that still the talk on the town, or?
Yeah, it really is. And we're surprised, frankly, Megan, that we have not seen that rate drop before now. There's a lot of factors, of course, as always. The feds, at least for the short term, have kind of halted their rate increases. I think there's some room, perhaps, there's some talk about the feds maybe even dropping the rate at some point before the end of the year, another quarter point.
Mhm.
But they may raise it another quarter between now and then anyway. But I think for the most part, the Fed is kind of done with their rate increases.
Mhm.
Some of the data on the economy is kind of mixed. We had a really hot jobs report 2 weeks ago. That was kind of unexpected. But then today retail sales are off. So there's all these factors that kind of come into play, but they're also in conflict with each other. They don't quite add
Right.
up. So the
Yeah.
market's confused there too, frankly.
Mhm. I think you're right. I think the market is confused. And I know from everything, I hate betting on future, things like the rates going down, that sort of thing, just because, of how long I've been in the market. I just don't believe anything
Right.
that I hear. And so I think that going forward here for the rest of the year, that if you're going to buy, of course, you're going to pay attention to what's happening in the market. If the property has been priced pretty well, then it's still going to sell, and it's going to sell with multiple offers. But the overpriced properties are going to sit there. And you might say to yourself, well, Megan, that house isn't overpriced. It just needs a lot of work. It's like, well, that it's overpriced, because if it was priced right, it would sell right away. So that's what I'm seeing from my end of things, that if it's priced right, it's still going to sell right away. If it's not priced right, it's going to sit there and you're going to have to make concessions. And looking at these numbers, and I know this is not everybody's scenario, but this is some kind of a measuring stick here, that I think that we're going to see, the prices softening up a little bit, but I mean, not out of control, but maybe not more of an increase for the rest of the year.
Yeah, I think that's
Sort of
spot
stagnant a
on
little
too.
bit. I
think the market needs a break.
Yeah, I've been on a lot of listing appointments in the last couple of weeks, and particularly in one neighborhood, and it's a newer neighborhood, and I had a couple of sales there, and so people are like, wow, Megan's magical. And so they've had me over, and in a couple of cases, one case I had a house listed at $899, it sold for $960, and the other situation, I had it priced at $959, it sold for $1,025,000. So the owners are like, well, what would you price my house out, considering what those sold for? And so I open up my spreadsheet and I show them what all the offers were on those houses, so they can kind of see what prices people were coming in at. And it's like, just because that one sold for that much more, still be mindful of your price it well to attract as many people as possible, so that you can have the best case scenario, because you'll get a lot better traction with not going bananas on the price. And now you can see why. Look at the interest rates, look at what's happened, where this is headed. So just be cognizant of what's going on.
Yep. Very good point, Megan. No doubt.
Anything else? Any other changes in the last couple of weeks? What have rates been doing? What's been going on?
Well, rates, because of the really strong jobs report 2 weeks ago, took a bit of a spike. We're really seeing rates up a little bit right now, but the projection is that we'll start seeing that break and start seeing the rates come back down a little bit. Now, what that does not mean, however, is we're not going to see rates in the fives. We're just not going to see it quite yet. We may get there eventually, maybe even lower, but who knows when that might be. It won't be this year. So I think we settle rates. Seems like the market seems to be settling right around the mid-six range on rates. And then just go from there.
I saw rates were up over 7 at one point, right?
They were
the last few weeks.
And some loans are over 7% right now, but they've come back down a little bit in the last, few days. But I think the rates are in the high sixes, low 7 right now, frankly. Yeah. But I think we'll see us settling somewhere down the low mid sixes.
Yeah, good. All right. Well, that's sound advice, and I love it. And I love your window, and I can't wait to see your kitchen when it's done, and hopefully you'll have us over for dinner. I know.
I will have you over for sure.
Okay, I'll talk to you soon.
Okay, thanks, Megan. See you later.
Thank you.